Hello, everyone, and welcome to this presentation about cycles, markets, and astrology. And in this video about financial investments, first, I'm going to break down 7 common myths about financial investments. And in the end, I will give some examples of how it is possible to time the markets and to understand the cycles of the markets using specifically astrology. So, for those of you who do not know me, um, my name is João Medeiros. I'm a professional astrologer from Portugal, and I've working on these subjects for more than 20 years. And it is a pleasure of mine to present these examples, and I hope you find them useful. Okay, thank you so much for those of you who are already in the session, and for those of you who are listening to this presentation after the recording. And um, first, I would like to um, talk a little bit about the 7 false myths about financial investments, and of course, I will explain why they are false. Okay, so the first myth is myth number 1. And good morning, everyone. I know that many of you here are from Portugal, but other people are attending from other countries. So thank you for your attention. So the first myth is that financial investments are very complicated and that we should stay away from them. Okay. The second myth is that it's very risky to stay or to be in the markets. The third myth says that only professionals in this area can do it well and consistently. Okay. The fourth myth is that in the long run, markets or stocks are always going up. So you just have to be buying every year or every month, regardless of the price. And that strategy is called dollar cost average. The, the myth number 5 is this one. It is impossible to time the markets accurately and to understand the market cycles. Myth number 6. No one has ever predicted very accurately and in great advance tops and bottoms for a certain year of a volatile market such as cryptocurrencies. And finally, the last myth that is connected to the other previous two is that planetary cycles are uncorrelated to financial cycles, and for that reason, astrology is nonsense. So, we will explain one by one why these assumptions are based on a false basis, and I'll give some examples. Okay, so first one, myth number 1: financial investments are very complicated and we should stay away from them. Well, I must say that financial investments are not more difficult than having, for example, a fitness routine. They are not more difficult than raising kids, for those of you who have children. It's not more difficult than having a job that you don't like. And it is not more difficult than dealing with relationships. Okay? So people think that it's very complicated to do any type of investments, but in reality, the practical part is not difficult. So money, abundance, investments, they are part of our life, and they are there to increase our level of well-being and abundance. So for the same reason that you don't say, well, I should stay away from exercising my body, I should stay away from taking care of my body. Or if you think about saying, oh, it's complicated to raise kids, so I should stay away from from their education. But of course you do not do that. Okay, you do not do that. It's part of life and it's part of your process of learning. And so we have very lessons in life regarding love, regarding family, taking care of our body, working well, and investments and money are only a part of those lessons. They are not more complicated. I would in my opinion, they are much more simple than, for example, having children and raising children. It's much more challenging, either physically and emotionally and mentally, to raise children than to invest. Okay, comparatively, investing is much easier. So also there is another important reason for us to be able, or trying to learn more about money, is that as we get old, money becomes more important because free time becomes more important. So as age increases, as we get old, we feel that the need to be more free, and for that reason to have more quality of life and more money. So there are many reasons to believe that financial investments are just part of our lives. And in the practical part, and this thing, it's fascinating why some people don't know that, but in the practical part side, investing is just like shopping online. It's the same thing practically as shopping online. So if you ever did a shop or bought something online, or with your mobile phone, or with a transfer online in computer, in the practical part, investing is exactly the same thing. Is pressing a button once or twice a year. Pressing a button once, twice, or four times a year. It's as simple as that. Of course, if you ask, oh, but having good results in investment takes some work or takes some knowledge. Of course it does. But the practical part is easy. Okay, it's so simple as making shopping online. The biggest difference is that when you buy something online, like a chair or like a book or like shoes or like food, if you want to sell it immediately, it's very difficult, or it's difficult. But with investments, you buy and sell very quickly. Okay, so the big difference is that when you buy something, a product, a service, like a book, if you regret and want to sell it to someone, it takes some time. But with investments, it's almost instantaneous. Okay, it's immediate, the sell. Okay, so this is the first myth. Then I hope it's making sense. So the real truth is that financial investments are a part of our lives, should be normal, and should be a habit, and, to be honest, easier than other habits. So if you go to the gym every day or three times a week, you are doing are having a habit more difficult to implement than the habit of investing. Okay, so, and but the better we manage and are able to multiply our money, the better life we had. Does it make sense? You can comment here if it's making sense or not. Okay, so the second myth is that it's very risky to be in the markets, so we must stay away from the markets and from investments. And I must say that this affirmation is partially true, but mostly false. Okay, mostly false. And the reasons for this are, for one side, we have inflation always, on average 2% a year, on average. There are years where inflation is higher, of course. And at the same time, so if you do nothing to your money, you're losing 2% a year at least. On the other hand, if you put some money in the most simple instruments of investments, for example, an index related to stocks like the Standard and Poor 500, that connects, or it's a bundle of the 500 most competitive American companies. If you put the money there, like a passive investment, on average, it returns 8%. 8%. So, what do you choose? Losing 2% a year or gaining 8% a year? And there is another fact that increases the odds of losing your power of purchase. Okay, and that reason is that governments, especially American government, but also European, are printing money and they're a lot, and their debt is exponentially growing. And so the risks are that in the near future, some years from now, inflation gets really out of control, and 100,000 euros by then is completely different from 100,000 euros now. Probably you can buy half of the things you can buy now. So because of inflation, of the real devaluation of the currency, of the hidden inflation and official inflation, if your money is stopped, or if you are only gaining money from a fixed salary, then most likely you are losing purchase power very quickly, and your standard of living will decrease. So it is less risky to be in the markets and buy stocks and own those companies through stocks than being out of the market. Okay, this is especially true in the long run. In the short run, not necessarily, but in the long run, it's normally true. Okay, does it make sense? The third myth says that only professionals of financial investments can do them well and can do them consistently. And if you read books about finance, you will quickly understand that this is completely false. This is false. The industry of finance wants you to believe that they are the ones who know, but in reality, this is not the case. This is not the case. So when you have money managed by a professional like a bank or another company, we call it a hedge fund. A hedge fund manages investments, financial investments, manages portfolios, makes decisions, subtracts commissions out of that, and gives you the profit if there is any profit. Okay, these are hedge funds. When you put a money to be managed by a professional, normally it's called hedge funds. It's a active fund. They do a lot of trades inside those funds. Okay, but if you read most financial experts, they will always tell the same. They will always tell you that if you put the money in the passive index connected, for example, or that replicates the S&P 500, which are, as I said, the 500 most competitive companies in America, if you leave the money there for some years, most likely you will have better results than an active fund traded by these hedge fund managers that take their commissions out of the fund and at the same time don't do the best decisions. So even stars in finance, such as Ray Dalio, has his portfolio, his hedge fund is having in the last years very bad results, And Michael Burry, which you would see in the film The Big Short, that he foresaw the crash of the stock market in 2008, and he won $800 million because of that. But he's consistently wrong in the last years by trying to say that the markets are going down and the market's always up, and he's losing money. So this is just to remind you that even some guys that you think are experts lose a lot of money, and most funds perform worse than a normal passive index fund. And there is a nice story about this connected to Warren Buffett, because Warren Buffett is a very, very famous investor, probably the most famous investor of all times. And because he knows that, he made a bet with hedge fund managers and told them, I bet that if I put the money in a passive fund that replicates the S&P 500, in 10 years, I will have better results than any of your funds that wants to align with me in this bet. So there is one fund that said, okay, we will do it. we will take this bet, this competition, and we will see in the end who will win. Okay, and so 10 years after this, in 2017, the results were completely humiliated the hedge fund manager, because the results were so different, so massively better for the passive fund, and so Warren Buffett won the bet, and the hedge fund managers, they didn't look well in the picture. Okay, so this is to remind you that it is not true that only professionals do it well. With the passive funds, you can do better because you have less commissions, it's cheaper, simpler, and with a very good performance. So the truth is that a simple, cheap, passive, and broad index fund could perform better in the long run than most financial experts, professionals, or bank consultants. Okay? Now, this leaves us to the myth number 5. Does it make sense so far? You can comment below if it's making sense so far. The fourth myth, it's more common within the field of people that invest regularly. And the myth says that because the markets are always going up in the long run, the better strategy is just to buy every month or buy every year, regardless of the price, because in the long run, you will have money. And so this looks right, but it is not right. Okay, so if you see here, it's a chart of the S&P 500 from the last 100 years. And if you see the line, yes, the line tends to grow up, tends to increase in value throughout the years. Okay, so if you consider a lifespan of 30 years, for instance, if you buy an index here 1940 and you sell it 30 years after this in 1970, you make a huge profit. Okay, or if you buy here in 1970 and you sell in 2000, 30 years, you make also a very nice profit. Okay, however, this is not true considering smaller spans of time of 10 to 15 years. For example, imagine that to buy here in the peak of 1929, it would take almost 40 years for you to recover your money. Okay, for you to recover your money if you enter the market and put your money, all your money then. Okay, same thing if you put your money in 1935 for 20 years or for 15 years, you would be losing money. Okay, if you put all your money in 1970 and you waited 30 years, you will be consistently losing money. So there are cycles in society, 15 years, where markets tend to go down, and another cycle of 15 years where markets tend to go up. Okay, and in order to understand this, you must know what is the concrete cycle or planetary cycle that is represented here. I will not tell which is a planet, but I will tell you very clearly that there is a cycle of a particular planet that correlates to this 15 years phase. Okay, 15 years of easy profits and 15 years of losses. Okay, so it depends when you go in or when you enter the cycle in this curve. Okay, is it clear? Is it clear? And if you see the chart, there is a pattern here. There is a pattern here, like a wave, like a wave. Okay, 15 years of going down or 10 years, another 15 years of going up. Okay, so if you bought here around 1982 and waited 15 years, you would have massive profit. Okay, but if you entered 10 years before this, of course not. You would have a great loss. Okay, does it make sense? So in the short term, there are cycles of declining markets. So buying every year reduces the risk, but it's not enough to avoid continued losses depending on the cycle. And for this reason, if you want to go in the market now, for instance, you must understand very clearly where are you now in this cycle. Do you know where we are now? Are we in the middle of the 15-year cycle of a good phase? Are we in the beginning of a good phase of 15 years? Are we on the end of a 15-year phase? Are we on the middle of a bad phase of 15 years? Where are we now, right now? So in order to know that, you should know astrology, in my opinion. Okay? I'll explain how you can learn more about that in the end. Okay, so let's continue to the fifth myth. And the fifth myth says that it is impossible to time the markets accurately and to understand, and to understand um, the market cycles, and to understand the market cycles. And as you see here, in astrology, especially financial astrology, we use a lot the cycle of 7 years, the 7 year cycle. And the 7 year cycles says that each year a different planet rules the energies or the subjects or the themes or the environment politically of that year. Okay, first is Sun, then Mars, then Venus, then Mercury, then Moon, then Saturn, then Jupiter, and then Mars again, and then Sun. Okay, so there is a repetition of pattern every 7 years. And if you understand the energy of that year, of that pattern, you understand the tendencies also financially for that year. And for instance, on average, the S&P 500, as I said before, returns 8% a year. Okay, but in Venus years, the average is more than the double. It's 20%. So on average, if you enter the markets in the beginning of a Venus year, it's very likely that you gain 20% after 1 year, doing practically nothing, uh, and just putting the money in the beginning of the year. Okay, but on the contrary, if you enter the market in the beginning of a Mars year, like for instance 1987, 2001, 2008, 2022, you can lose 30% or 20% of your money in 1 year. Okay, so typically, for example, in Mars years, such as 1973, 1931, 1945, 2008, 2015, 2022, are years of crisis, either terrorist crisis and wars, or financial crashes, or energy shortages, or big political problems. So because the environment is difficult, it's tense, of conflict, the markets tend to crash, and to behave not so good. Okay, so it is important to understand not only the 15-year cycle, but also the 7-year cycle, and which planet rules this year. Okay, because for that reason, you know what is the average that you can expect based on the tendencies of that year. Okay, so if you remember what happened 2001, the Twin Towers attack, 2008, Lehman Brothers crash, 2015, the terrorism, Islamic terrorism, 2022, the Ukraine war, 1973, problem with the price of oil and energy, 1945, nuclear bomb, and so on, and so on, and so on. Okay, so if you see a more precise chart of the top performing years and the worst performing years of the stock market, you will see a lot of bad years, such as the worst of all times, which was 1931, very, very negative. And the last really, really negative was 2008, also Mars year, 2022, 1973. And on the other hand, if you see the best years, many of them were ruled by Venus, just like 1933, 1954, 1975, 2003, 2010, all Venus years. So if you see and compare. Of course, were also Mars years that were good and some Venus years that were not so good, but this is a tendency of a pattern that you can understand the differences with other information beyond the 7-year cycle. Okay? Another example. Another example is this forecast that we made in our course, Financial Astrology. This forecast was made in the end of 2022 to the students, and this was the forecast of the monthly trend of the stock markets, of the S&P. We used new moons, especially new moons, also full moons, and other transits. And as you see here, the red arrows pinpointed perfectly the big crashes of the market in that year. There were two big crashes, one in March and the other in October, that were forecast in advance. And the good phases, February, January, middle of the year, beginning of November, were also there. And the correlation, if you see the difference between the top graph and the bottom graph, which is the reality, is staggering because it's almost 100% of correlation. And so if you use this information, selling stocks before the fall and buying in the middle of the fall, you will increase or double your return. Okay? So you can ask, how did you get there to these conclusions? As I said, using the diagrams and the charts of the new moons and other transits, especially cast for New York. And if you have falling new moons, such as the one in end of February, such as the one of the mid of October, falling new moons are one of the indications of tendency of fall of the markets. So this is precious and really valuable information, really precious information, just to show you how it is possible to understand the markets. Okay? So I hope that so far it is more clear that is possible to understand and forecast in advance the markets. And now we will go in more deeper details. Okay? Because the myth number 5, as I said, is that using cycles such as the 7-year cycle, planetary transits like the cycles of Saturn and Mars, and lunations such as new moon and full moon diagrams, it is possible to make very good forecasts of the markets, either in an annual view, monthly, or even weekly perspective. Okay? Or even weekly perspective. Make sense? Okay. Sixth myth. And I believe this sixth myth, false myth, will shock many people. And the myth says the following: no one has ever predicted very accurately and in great advance tops and bottoms for a certain year of a volatile market such as cryptocurrencies. And I must tell you, there is at least one example, at least one very accurate and verifiable forecast of the cryptocurrency market for a certain year, timing with a great precision and accuracy, two major tops and the bottoms at least 1 year in advance. And that forecast we made in our course Financial Astrology last year to our students, at least 40 students that can testify if you want them to talk about it, what happened. But if they have followed the plan, they would at least double the performance of Bitcoin, which was already very good in 2024, around 50%. If they use the plan, instead of 50%, they would have 100% of profit. And if you think about altcoins, coins that are not Bitcoin, if you use the same plan to altcoins, the return would be even higher, two times or 5x the return of Bitcoin. So this was true, and we have proof of this. If someone tells that we are lying or something, we have proof either with testimonials or with their presence, either with videos. And I would like to show you the diagram that we presented to our students before the year started of 2024, or just in the beginning of January. And we told them here in green when you see the big B and a green circle, it identifies a big buying opportunity of cryptocurrencies, big buying opportunity. And we pointed three major points of great buying opportunity. Beginning of the year, the biggest buying opportunity. In the mid of April, big buying opportunity. And in the mid of September, big buying opportunity. And for the same reason, we said that big selling opportunity around mid March, specifically around 11th of March, and specifically between 5 to 6 of June, between 5 to 6 of June. And these were the two main tops of the year for Bitcoin so far. Okay, so in on the upper chart you see our forecast. We try to draw a line of what we expected would be the tendency, and we put the yellow emojis for the good phases, the red circles for the selling opportunities, and the green circles for the buying opportunities. Okay, and so if you are acquainted to Bitcoin, the tops were on the 14th of March for Bitcoin, 11th of March for Ethereum, 5 of June for Bitcoin, and the bottom was between 7 to 17 September, and also a bottom in mid-April. So the forecasts were very much on spot, and I'll challenge you to find another better forecast for this year of 2024. Okay, so the principle is, if you want to know what is the trick, I will not tell everything about the trick for Bitcoin. How do we know the tendencies in terms of these specific peaks? But the main rationale is this: near new moons that are connected or are close to important planets, there is a tendency for a peak of cryptocurrency market. When there is a new moon near or close to important planets, there is a tendency for a peak of Bitcoin and cryptocurrency markets. Okay, there are more details, and there is an explanation why new moons and not full moons, but I will explain it in our course. Okay, so let's go on to the seventh and last myth, which is the following: planetary cycles are uncorrelated to financial cycles, and for that reason, and not only for that reason, astrology is complete nonsense. Okay, this topic could make me talk here for hours and hours that we don't have right now, so I'll just stick to the financial astrology part and ask this. Okay, so far you saw very nice correlations. Okay, so far you saw very nice correlations: 7-year cycle, 15-year cycle. But you can say, okay, but this is like numerology, it's like a number thing, mathematical, it's not really astrology. Okay, the moon influences tides and the oceans and the female cycle and the ovulation. So okay, the moon I understand, but the other planets, they are far away, they are very distant. It makes no sense that they work in this financial cycles thing. Okay, but to be honest, it works so well that you cannot imagine. I will give two more examples. Okay, two more examples. The first example is oil. So every product or service is connected, because of the essence of the product, to a certain type of planet. Because oil rules energy, energy in astrology is connected to the planet Mars. Okay, energy, physical energy, and energy like putting energy in a car is connected to the planet Mars. So in Mars years, or in specific days or weeks when Mars is especially strong, for example, like what happened in June 8th, 2022, where Mars was in one of his signs of maximum strength, which is Aries, joined Jupiter, and that takes place every 24 years. This conjunction in Aries, every 24 years, we have a conjunction of Mars to Jupiter in Aries. Okay, so there was a peak on that precise day, and also on the 8th of March, where Mars was also very strong in terms of sign in Capricorn and conjunct Venus. Okay, this was 2022, as I told you, a Mars year. So it was a year of conflict, Russia, Ukraine. The price of energy went up, and in these specific days when Mars was the strongest in the whole year, were the precise days of peaks of the price of oil. So as you can see, it can be precise to the day, even if we forget the new moons. Even if we forget the moon and only connect the main planets that rule a certain asset, we can get there. We can get there. Okay? Other example is the famous Mercury retrograde. So for you that don't know, normally for 4 times a year, Mercury appears to move backward in the zodiac. And when that happens, we say that Mercury is in retrograde motion. It appears to went back in the zodiac. And if you see the correlations of the worst record-breaking months of the S&P, of the stock markets, we would expect only 20% would have Mercury retrograde, okay? But in reality, it is 85%. In 85% of the times, of the months with the worst crashes since 1970 of the stock markets, in those 7 worst months, at least 6 happened during Mercury retrograde. If there was no correlation, we would expect only 2 of this. Okay, only 2 of this would be here, but no, at least 6 were here. 85%, 16 out of 7. So a huge correlation. And that makes a lot of sense, because when Mercury always also rules the trades, and so when Mercury is slow and moving backwards, it makes sense that the trade has some problems or moves backwards. Moving backwards meaning losing value. Okay? So the real myth or the real truth is that markets such as stocks, gold, oil, cryptocurrencies can be highly correlated to the precise day or week to important planetary cycles. Okay? To important planetary cycles. So, as you see, just to summarize some ideas of these 7 myths, it can be easy. The act of investing is easy. It's just like shopping online, buying or selling, very easy. Of course, having very good results can be a bit difficult. Second, there are cycles. There are cycles in the markets, and so you should stay in the market, because in the long run, the markets perform better than inflation. So in the long run, it's better to be in the market, inside the market, than outside, because of currency devaluation. However, it's important also to remember that in the long run, markets tend to go up, but that depends on the cycle of 15 years where we are in. Okay, so you must pay attention to that. Also, you must remember that many people think that only professionals of investments can do it well and consistently. I must tell you that in the last 2 years, if I have followed the advices of many people and experts that I saw on the internet, experts of 30 years of work in investments, if I have followed their advice in those videos of investments, I would be losing right now 30 or 40% of my money. So it is a big illusion to think that only hedge fund managers and banks, they will know how to do it. It's completely false, and I explain why. With a cheap passive exchange trade fund, you can do a very good performance with less commissions in the long run. Okay, so you saw also that it's possible to understand markets and the market cycles. They have cycles. You saw some examples, and that is possible to predict even markets such as cryptocurrencies with a very high degree of accuracy. And then in that the other planets other than the moon, they are also connected and can be interpreted in terms of the assets they rule in financial markets. Okay, so now I would like to tell you how you can learn more about this. I will speak a little bit about our course and remind you what are the advantages of using financial astrology. And the first advantage is that you can have more trust, confidence, peace of mind, and clarity while investing. The first advantage: trust, confidence, peace of mind, and clarity while investing, because you have an idea, a plan of what the cycles will be. Okay, that idea probably will not be precise 100%, but it's better to have that idea, consistent idea, than no idea. Okay, second advantage is that you can have a clear plan or strategy in terms of timing, both in the short term and in the long term, with a clear justification of arguments. And even if you are a professional trader, I must tell you that you can forecast changes of the mood of the market by the hour, observing the angles of the planets, the angles they form during the day. So either for long term or short term, it can be very, very useful and very effective. Okay. The third advantage is, of course, is obvious: reducing risks of loss and improve odds of profit. Of course, this is the idea and the goal, and it achieves the goal. And finally, the other is that you have an edge. If you have this knowledge, because the financial market is a very competitive environment, but most people ignore this fabulous tool. And this tool helps us to overcome the biggest problems in financial markets, which is to understand the cycles. So if you use financial astrology, you'll gain trust and confidence. You'll have a clear plan, short term and long term. You will increase your odds of profit, and you will have a precious edge comparing to the normal people that are in the market and don't believe that such a tool can be so effective. Okay, and this is the biggest problem in financial investments: is a clear understanding of the cycles, and you will have that advantage. Okay, and of course the returns. You could gain or make 2 times to 20 times more the return compared to not using it. So if it's well done, the research, and well presented, the research in the forecast, then you could increase your odds or your gains or your profit at least 2 times, if not 20 times more. And probably I'm being a bit conservative. Okay, so these are the main advantages. And I would like to just show you some testimonials of students of ours. For instance, Jose: it was possible to make investments with accuracy and performance never before achieved. Or, for instance, Todd, that is an American entrepreneur and professional trader, and he was completely shocked by the accuracy of the work with financial astrology. And he tells, João's forecasts are unbelievably accurate, and paired with appropriate risk management, the course pays for itself many times over. Or Pedro, tech consultant, that says it was mind-blowing, and many of them said that it is mind-blowing. Of course it is. Mind-blowing how astrology can be used to analyze the markets and get an impressive accuracy. Or, for instance, Cecilio, also an experienced entrepreneur, that says, for the first time of my life, I won in cryptos with very good returns. I made at least 20 times more the value I invested in the course. So these are real testimonials. You can meet them online, these people. They're very nice people. And so I would like, just if you are interested in understanding more about our course, I will now give you some details about the course, and I'm open to questions. So this course, the goal of this course, it's addressed either to investors, amateur investors, or professional investors. So if you never invest in anything, it is a good course for you. But of course, if you already are doing some investments, it is even better. You don't need to know astrology beforehand. I will digest the astrology and present it in the clearest way possible, but I will show you the arguments to get to a conclusion. Okay? It's 5 lectures of 1 hour and 30 plus 4 sessions of questions and answers online. I will be with you just answering questions. Okay? But 5 lectures are really dense with material and conclusions as well. From November 21 until December 19 of 2024, but the the lessons, they will be recorded. You can be there all live or not, but you can watch them for the whole year of 2025. Okay. Plus, we have a follow-up Telegram group during the whole year. Follow-up Telegram group during the whole year, where we will make updates and comments about the markets. And this is the main goal, to understand the broad stock market and also the market of cryptocurrencies with more detail. Okay, with more detail. You can ask me, how can this be useful if I don't buy indexes such as S&P, but a stock such as Microsoft or Tesla? These stocks are connected to the biggest cycle. So if I say that the stock markets in general will fall in this month, it is very likely that the biggest companies will also fall during that month. Okay, and so you'll have information in order to make some action. Okay, some action. So if you will want to know more, until tomorrow we'll have a special price. Until tomorrow we'll have a special price, and after that the price will increase. You can have all the information in finastrology.com, and tomorrow at 4 o'clock we'll have a Zoom session of Q&A for the ones interested. You just have to go to the email, and in the email, info@finastrology.com, you say, I'm interested in this Q&A session of Tuesday, and we'll give you the link to be with us, making questions if you are interested in the course. Okay? So I hope you have enjoyed the session. I'm open to some questions right now, if there are some questions. If not, I will just stop the session. But I would like to thank a lot those of you that were here online, and also the others that are attending this session after the recording. And I hope my English was comprehensible. Sometimes not easy to be shifting here the translator in my mind to English, but with the handouts and everything, I think it was clear. So if you know already astrology, of course, this course is an atomic bomb, and it will change your life forever, in my opinion, if you're already an astrologer. If you're an investor, I believe as an investor, it could change your life forever, because the most of our testimonials of the students that are repeating the third edition, they were in the last 2 editions, they are even repeating the third edition. They all say the same thing. It's completely different to face investments with a plan and with an astrological view than without an astrological view. Okay, thank you a lot, Andrea. Thank you a lot, everyone that had the patience to be here. If you are interested, you're more than welcome to this course. It is in English. I know that most of my public is Portuguese, but there are international students there, so the course will be in English, and we want more people from abroad to come to our course. Okay? So, from my part, thank you so much for your interest in this presentation. I hope it opened your mind about this topic if you never heard about it before. Thank you, Rui. Thank you, Teresa. If you never heard about this topic, I hope it changed some ideas. You saw examples of how the cycles can be understood, but in reality, this can be more complex, more precise, more intense, and more fascinating. So if you are interested, just go to finastrology.com or give us and contact us by email. Okay? Thank you so much.